Right now, as you're watching this, Bitcoin is down, Ethereum is down, your screen is probably red, your timeline is full of panic, and somewhere in your mind, there's a quiet but dangerous question forming. Did I make a mistake? This exact moment, this uncomfortable, emotional, heart-sinking moment, is where most people lose money forever, and a very small group quietly position themselves to win. Not because they're smarter, not because they have insider information, but because they understand one brutal truth about markets that almost no one talks about. Price going down is not the enemy. Confusion is. Fear is. And today, Bitcoin and Ethereum aren't just testing price levels, they're testing people. If you don't understand what's actually happening beneath this drop, you'll either panic sell at the worst time or freeze and miss the opportunity entirely. But if you do understand it, this could be the most important moment of your investing life. Most people think markets move on news. They don't. Markets move on psychology. News is just the excuse. When Bitcoin and Ethereum drop on a random Tuesday, it's rarely about that headline you saw 5 minutes ago. It's about positioning that started weeks earlier. Institutions don't wake up and panic sell. They plan exits, they drain liquidity, they wait for emotional retail money to react. And when price finally breaks down, it feels sudden to the average person, but it was scripted long before the candle turned red. That's why reacting emotionally right now is exactly what the market is designed to trigger. You feel late if you didn't sell earlier. You feel stupid if you bought near the top. And worst of all, you feel pressure to do something. That pressure is the trap. Bitcoin going down does not automatically mean Bitcoin is failing. Ethereum going down does not mean Ethereum is broken. Assets don't die because price pulls back. They die when belief disappears. And belief hasn't disappeared. What's happening instead is a reset of expectations. During uptrends, people stop asking hard questions. They buy because numbers go up. When the market turns red, reality shows up. Weak hands exit, over-leveraged traders get wiped out, and smart money waits. This phase is uncomfortable by design. It has to shake people out. Otherwise, there's no fuel for the next move. Here's what most beginners get wrong. They think opportunity looks exciting. It doesn't. Real opportunity feels scary. It feels uncertain. It feels like everyone else knows something you don't. When Bitcoin was cheap, nobody wanted it. When Ethereum was ignored, it was called a failed experiment. The moment everyone agreed crypto was the future, risk actually increased. That's the paradox. Safety in markets comes from disbelief, not hype. Right now, disbelief is slowly returning, and that's not a coincidence. Now let's talk about traps, because not every dip is a gift. Now we move deeper into what this moment really represents, because the surface-level explanation is never enough. Bitcoin and Ethereum aren't just assets, they are reflections of risk appetite across the entire financial system. When interest rates, global liquidity, and macro uncertainty collide, crypto reacts faster than traditional markets. That speed makes it look unstable, but it also makes it honest. It shows stress early, and early signals are valuable if you know how to read them. Right now, fear is rising, but capitulation hasn't fully arrived. That's important. True bottoms don't come when people are nervous. They come when people stop caring. When conversations shift from, should I sell, to, I don't even want to think about crypto anymore. We're not there yet. That means patience still matters. Opportunity doesn't demand urgency, traps do. If you feel rushed to act, slow down. The market will always give you another candle. Let's talk about Ethereum specifically, because its story is often misunderstood. Ethereum doesn't move only because of Bitcoin. It moves because of expectations about usage, fees, and development. When ETH drops alongside Bitcoin, people assume weakness. But often, it's correlation, not causation. Ethereum's real battles happen quietly, in updates, scaling solutions, and developer activity. Price lags progress. Always has. The market doesn't price innovation immediately. It prices emotion instantly. As fear grows, influencers get louder, predictions get more extreme. Some call for total collapse, others promise instant rebounds. Both sides are usually wrong. Markets don't move in straight lines, and they don't reward certainty. They reward adaptability. Right now, the smartest move for most people isn't buying or selling in panic. It's observing. And here's the uncomfortable truth. If this drop scares you enough to lose sleep, your position size was probably too big. Risk management isn't about being right. It's about staying in the game. The question isn't whether they'll recover. The question is whether you'll still be emotionally and financially positioned when they do. This moment is about emotional control. Are you reacting or are you responding? Are you following noise or are you reading structure? Every major opportunity in crypto history looked ugly in real time. Every major trap looked obvious in hindsight. The difference was never information. It was emotional control. As we move forward, the picture gets clearer. What most people don't realize is that markets don't punish ignorance as much as they punish impatience. We'll explore that cost in part 3. What most people don't realize is that markets don't punish ignorance nearly as much as they punish impatience. Right now, Bitcoin and Ethereum are sitting in a zone where impatience gets expensive. People want answers immediately. They want to know if this is the bottom or if they should get out completely. That desire for instant clarity is exactly what creates bad decisions. Markets thrive in uncertainty. When Bitcoin starts dropping, the first group to react is always late buyers. These are people who entered after a strong run-up, not because they believe deeply, but because they didn't want to miss out. When price pulls back, their conviction disappears instantly. They sell to protect what's left, and in doing so, they provide liquidity to smarter participants. This is how markets function. Ethereum follows a similar pattern. ETH investors often think they are more informed because they understand utility, but when price drops hard, logic gives way to fear just as fast. A huge amount of crypto price movement is driven by leveraged positions getting liquidated. When Bitcoin drops below certain levels, forced selling kicks in automatically. This accelerates the move and creates sharp, ugly candles that feel catastrophic. But forced selling is mechanical, not emotional. Once it's done, pressure often eases. At market tops, everyone believes dips are temporary. At market bottoms, everyone believes drops are permanent. The truth lives somewhere in between. Right now, fear is growing. Patience here doesn't mean doing nothing blindly. It means being intentional, watching how price reacts to bad news instead of good news. Markets speak through behavior, not opinions. Narratives are powerful and dangerous. When price is up, they sound intelligent. When price is down, they sound convincing. Narratives don't predict price. Price creates narratives. Crypto is not designed to feel safe. It's designed to move fast. That volatility is the cost of opportunity. The pain you feel now is directly connected to the upside people chase later. Opportunity is personal. It depends on your timeline and risk tolerance. What's a golden opportunity for some can be a devastating trap for someone overextended. Position matters. As Bitcoin and Ethereum fluctuate, people stop trusting themselves. They refresh charts constantly. They switch strategies daily. This mental exhaustion removes participants who can't handle ambiguity. Those who survive learn to detach emotion from execution. They stop trying to be perfect and focus on being consistent. Perfection is unnecessary. Discipline is essential. One of the biggest myths in crypto is that you need to catch the exact bottom to succeed. Another signal worth paying attention to right now is silence. When mainstream attention fades, when crypto stops trending, when friends stop asking about Bitcoin, that's when opportunity starts forming. We're not fully there yet, but we're moving in that direction. Attention is cooling, excitement is fading, doubt is growing. These are ingredients, not conclusions. Ethereum in particular benefits from periods of low excitement. Development doesn't stop because price is down. Builders build regardless of charts. The market eventually notices, but never on your timeline. That mismatch between effort and reward is what creates frustration and opportunity. At this stage, the most dangerous thing you can do is force certainty. Markets don't owe you clarity. Your job isn't to predict the future perfectly. It's to position yourself so that multiple futures don't destroy you. That's the mindset shift most people never make. At some point during every downturn, fear slowly loses its intensity because people get tired of being scared. Charts stop being checked. The urgency fades. Silence feels like safety. But it's actually preparation. Bitcoin and Ethereum don't need excitement to move. They need imbalance, and imbalance builds quietly. This is when the market becomes most deceptive. One sign that a drop is transitioning to opportunity is when bad news stops having power. Sellers are weaker, buyers are cautious, but present. People call it boring. Professionals call it accumulation. Doing nothing feels uncomfortable. That discomfort is the cost of positioning early. Opportunity rarely announces itself with confidence. It whispers while everyone else is distracted. Long periods where price went nowhere, then structure shifted. Resistance broke, momentum returned. And the same people who said crypto is dead were asking how high it could go. This is pattern recognition. Ethereum's value proposition is harder to explain. It's not just digital money, it's infrastructure. And infrastructure doesn't get appreciated until it's needed. Price tends to move before understanding catches up. We are somewhere between disbelief and acceptance right now. Not early enough to feel obvious, not late enough to feel euphoric. That middle ground is uncomfortable, which is exactly why it exists. A framework doesn't predict price, it defines behavior. Without answers to your risk questions, every candle feels personal. Every drop feels like an attack. That emotional roller coaster is not investing. Bitcoin doesn't need everyone. It never did. Neither does Ethereum. They move when the marginal buyer changes, when sellers are exhausted and buyers become patient instead of impulsive. This shift doesn't make headlines. You only notice it in hindsight. We'll wrap this entire journey up in the final part. Toward the end of every difficult period, there's a moment where nothing happens. No crash, no rally, just stillness. That stillness feels pointless, but it's necessary. It's where excess emotion drains out of the system, where leverage resets, where expectations realign. Without it, any rally would be fragile, any drop would be violent. If you're still paying attention at this stage, you're already doing something most people don't. You're staying engaged without demanding immediate reward. That alone puts you in a smaller group. Not smarter, just steadier. Markets reward steadiness over brilliance far more often than people admit. Eventually, momentum will return. It always does. When it does, narratives will flip again. Confidence will come back. Certainty will feel obvious. And the memory of this discomfort will fade quickly. The real question isn't whether Bitcoin and Ethereum will recover. It's whether you'll remember what this phase taught you when they do, whether you'll respect risk when optimism returns, whether you'll recognize excess when it feels good instead of dangerous. Cycles don't repeat because people forget facts. They repeat because people forget feelings. This moment right now is not a verdict. It's a filter. It's separating reactions from responses, noise from signal, emotion from structure. Whether it turns out to be a trap or a golden opportunity won't be decided by the chart alone. It will be decided by how participants behave while uncertainty is still uncomfortable. And that's the part most people miss. Thank you for watching this deep dive. Stay steady.